You first changed your call to a 50 basis point cut after Thursday when you heard Mr. Williams speak. Then you had to change it back to 25 basis point cut because the New York Fed clarified it. What's it like to forecast rates right now?
That's a very good question. It's great to be on. Yeah, these are very interesting times, and obviously more than anything else, it tells us how sensitive markets and we are at this stage looking at the Fed. In general, I think the Fed has been somewhat predictable in the sense that they've shown their dovish colors. They've told us that they want to make sure that they can sustain this expansion. So we have for a long time believed that we will see about 50 basis points of cuts from the Fed by September. But last week we had this peculiar episode where we thought Williams and also Clarida in his TV interview were messaging to us and the public that they were willing to front load to 50 basis points in July. That was walked back to some degree, so we walked it back too. But I think in the great scheme of things, it doesn't actually change that much. We're still left with a very dovish Fed.
Does it change how you react to the next speech you hear? Because at some point, it's like the boy who cried wolf. How do you trust him next time?
Yeah, so I think it does make the interpretation of some of the Fed rhetoric a bit more difficult. And it's not entirely obvious how to interpret that back and forth, whether they misinterpreted how markets would receive the messaging or whether there was some significant pushback. I think it does tell us perhaps that there's a bit of a divergence of views among the core of the Fed, which we thought was quote-unquote driving the bus, and some of the others, and that what we are likely to see in July is some sort of measure to broaden the consensus, and we think that's 25 basis points.
And you have a consensus then that also you see a weaker dollar because of that. Can you walk us through your call?
Yeah, so I think what we've emphasized consistently is that the Fed is really only one factor that affects where the dollar goes, but there's a consistency, and right into the first Fed cut, the dollar tends to be weak. We are, in general, broadly still constructive on the dollar, but we think tactically bearish into that first cut is the right place to be. But the dollar isn't our favorite currency in G10 either.